Hey folks, Dan Frio here, the rate update. Today is October 1st, 2020. So what happened today in the market? We'll find out here in a minute. Don't go away because we're going to check out the markets with the bonds, the stocks. Then we're going to go over the new format I have today. We're going over conventional rates, FHA rates, VA rates, and we just added jumbo mortgage rates. And you might be really surprised if you're out there for a jumbo loan over $1 million. You might be pretty happy. So don't go away. Okay, folks, so what happened today? Well, let's talk about what happened with let's go with the economy, the stock market, the bond market, and mortgage rates. Okay, we're going to break that down accordingly. It all has one theme: what the government is doing in regards to a stimulus plan. And everybody's sitting on the edge of their seats trying to find out if it's going to happen, when's it going to happen. So today we saw in the stock market, nothing really happened. Basically nothing. We came out of the gate today in the bond market, especially mortgage-backed securities, and I'll explain to you why we follow those here in a second. We came out today with the unemployment claims came in better than expected. Not huge, but not bad. Unemployment claims came in at 837,000 for the week. It was 33,000 less than where we were last week. So that's good news. More good news, kind of, is the inflation index that the Fed watches. They watch the PCE, which is a specific inflation number that the Federal Reserve watches. It was up 0.3, right in line to where we thought things were going to come in. We were, though, expecting year over year, so it went up 0.3 from last month. Okay, year over year now we are up 1.4. We were expecting that year over year to be 1.2. So running a little bit hot, but nothing out of the ordinary that we thought. And again, the Fed has, the news that was out a couple weeks ago is the Fed has a new triggers on inflation and all this stuff that really jittered the markets for a little time frame, and then it kind of just squished. So their benchmark is usually 2%. We're at 1.4. And they're saying, we'll even let it run a little bit hotter than the 2%. So no worries on the inflation front. The Dow opened the day up 174, and I think it ended the day, and we'll check that here in a second, basically flat. Mortgage-backed securities, though, opened the day -9, and you're going to see right now we're up 6. That's a pretty big move. So what's happening there is both parties are getting together, coming out with maybe, possibly, and we're at the edge of our seats, a new stimulus package. So let's see kind of where we are right now with everything. So going. Like for a stock, if you're watching a stock and today it was, that price is $100 and yesterday it was $90. Okay, we know that, but where do we think it's going to be tomorrow, a week from now, a month from now, a year from now? That's the whole thing that we try to do here. So what I try to do my best of is you have a specific window that you're looking to refinance your home, and you want to probably get it done now. However, I monitor this, and let's say you go in, you might have went in 2 weeks ago, and your rate might have been 3%. But if you work with me and you follow my videos, I might be able to get you 2.875. Might not seem like a huge difference, but our average loan is about $300,000. It might be $100 a month. Well, $100 a month for 30 years, 360 payments, that's a lot of cash. I also see on a daily basis when people send me their mortgage quotes, they'll have a rate that basically with the rate I can get them, but what a lot of the competition's doing right now is they're putting a bunch of fees on. I can show you 2 today. Each person, each one of them, 2 in specific that I'm referring to, we're saving them over $5,000 in fees. So somebody did make a comment on YouTube. Why would you watch this guy on YouTube and have him do your mortgage? And I commented back, not trying to be smart, is why not? I mean, what you're looking to do is get money, okay, as cheap as you can. But there's a lot of caveats involved in this process. When I say cheap, I don't only mean your rate. How much is it costing you to get that money? Also, are you in the right program that you should be in? And I'll show you that here in a minute. How where your credit score could hugely affect your rate. So you want to make sure you're in the right program. So you want to make sure you're in the right program, you lock at the right time, you check out all the fees out there. So why not watch me and at least send me, I always say, if you're on the market right now, you have or you're in the process of refinancing right now, you have a quote or you have what's called a loan estimate or a fee sheet from your current lender. Send it to me as a second opinion. Okay, I'll write all over it in red pen. So if you're working with me now, you know exactly what I'm talking about. I'll write all over it in red pen, shoot it back to you and say, here's what I can do. And like I said, today I wrote back on both of them. I'm like, in this case, you can get, one person was 3.125 and it was charging them about $7,000 in fees. I said, I can do 3.125 at zero lender fees. Okay, zero. Or I said, you can do 2.99 at $895 in fees. That was one instance, and I'm not just, the fish story. It happens every day. So that's why you watch this guy on YouTube and you at least reach out to him. And let's say I can't help. Would you waste 10 minutes of your time, emailing me a document or a couple documents and then corresponding back and forth with me twice on email? So that's what we're talking about right now. So here's why people follow me. Here's why people reach out to me. I follow this meticulously on a daily basis. This number right here is what we watch. What is this number? Well, this number is what we call mortgage-backed security. The price, what happened to the price of this mortgage-backed security? A mortgage-backed security is a bond that trades on Wall Street as an investment that is the biggest determining factor of what your mortgage rate's going to be. So this bond is the integral part of your mortgage rate. Okay, the baseline. So how do we monitor this thing? Well, again, if you paid attention to what I said, this is what happened to the price of the bond for today. As this price goes up, which is green is good. Prices go up, yields come down. So you're like, damn, the price went up. That's good. No. I said the price of the bond, not the yield or the rate of return or your mortgage rate. So as the price of the bond goes up, your mortgage rate comes down. And vice versa the other way. If this number was red, meaning the price went down, your rate goes up. So that's kind of bonds 101. All right. So that's what we followed today. And a lot of people, unfortunately, even a lot of people in the mortgage business, they follow the 10-year Treasury. And they're like, well, the 10-year Treasury, was flat today. Okay, who cares? Because it has nothing to do with mortgage rates. So if you're in the middle of a refinance right now, just ask your mortgage person, saying, hey, what do you think rates are going to do tomorrow? If they say, I don't know, say, well, yeah, that's why I'm using you. Shouldn't you be able to guide me? If you said that to your stock advisor saying, hey, what do you think the price of my stock's going to do tomorrow? If they, I don't know, you probably would find another mortgage advisor, stock advisor. So that's what's going on right now. And this is live. So we'll come back to this at the end and let's see where we ended up the day. Then we go through here. Here's the chart. And this is, the past is normally not a duplicate, but it's at least a guide of what's going to happen in the future. All right. So that being said, if you go back to my videos, and I'm not one of those ones that's, predicted, oh, the stock market's going to crash and just left it at that, and then 5 years from now, it's like, I told you the stock market's going to crash. Well, anybody can say, oh, the stock market's going to crash. In my lifetime, it's going to crash again. But I try to at least guide you short term with specifics. I said back in these times right here, the Federal Reserve stepped in, and what they're striving right now to do is get stability in the markets. Okay, and I'm going to put 2 lines here because I kind of messed that one up. It's going to be right between there. This is what's happening to mortgage-backed security prices over the last quarter. Let's go back to the last 6 months. Look at the move that we made. Okay, remember when I said this is the price of the bonds. So as prices go up, mortgage rates get better. Look where we were in June. We were down here. Look how much better we got. Let's go back to where we are for the year. Look at this. This is insane. Pigs get fat, hogs get slaughtered. If you're still waiting for a little bit more of a reprieve right here, guys, you're going to get slaughtered. We went from here to here. That is one enormous move. All right. So now let's get on to some specifics. Here's what I predict until election time. Or let's take that out. What happens with the stimulus? If a stimulus package gets approved, you might see something happen in here. Okay, it's probably going to be maybe not so good for the bond market, such as mortgage-backed securities. Because what it's going to do, it's going to incite more and more people into the stock market. Okay, so you basically have, let's look at it in this way, and I'll try to simplify this as well. You have two investment tools if you have money to invest, and that's what Wall Street does. So you have bonds and you have stock. Okay, so you have those two entities. Most younger people or investors, or especially right now, a lot of people are jumping head over heels into the stock market. So you might be 90% in the stock market and 10% in the bonds. All right. As the Fed is making money more readily available and credit readily available, people are in the euphoria is going through. People are putting more and more and more and more money into the stock market. Okay. When there's uncertainty in the world, people might transpose that percentages and say, you know what, I want to put 80% in the stocks and 20% in the bonds. Things get a little more scary. You might get to the point as 50% in the stocks, 50% in the bonds. Okay, so what that's doing is the more money being pushed into bonds, you have more demand. Supply is going to be steady. Okay, so when you have more demand and a stable supply, you have an increase in prices. Okay, but again, the inverse works on that. If the stock market is really doing well, and we went through the coronavirus pandemic, there's huge uncertainty there. So more and more people jumped into the bond market, such as mortgage-backed securities. So when the Fed or when the government comes out with a new stimulus plan, or we get a new vaccine, or some other good news comes in, you're going to see mortgage rates go up. Why? Because people are going to move out of bonds and put their money into stocks because there's less uncertainty in the world. They know, okay, the pandemic's going to go away because we have the cure for it. So that's what's going to happen there. Again, if we go back to here, when the pandemic hit, everybody's fearful, everybody's getting out of everything, and this is what happened. Okay? But now with things getting a little bit better and the Federal Reserve stepping in and buying up the market, they've stabilized the market. So I hope that makes sense to you. So my prediction is we're really going to see stability here. But if you watch my videos the last couple of days, I said we're going to move back into this range down in here. And that's what we've pretty much done if you look down through here. We're pretty much moving back down into this range, but we're still hitting a brick wall every time we try to surpass this red line right here. We hit a brick wall and we stop. And this wall, I think, is going to hold steady through the election unless something major hits. We get a coronavirus vaccine, or the Fed comes in with an astronomical amount of stimulus money. Okay, so that's what I predict what's going on. So I really don't see anything going on right now. The one thing that is going to take effect, and it took effect with us today, and most lenders, is there's an article that the writer of MoneyWise, Doug at MoneyWise, wrote, and he posts on Yahoo Finance and MSN News and so forth. And I was a part of this conversation that he had. Let me find it in here. Borrowers must hunt harder for low mortgage rates due to new fee. There's a new fee coming out, And it takes effect truly in December 1st, but the loan has to close, fund, and be sold to Fannie Mae and Freddie Mac by that time. So he writes in here and he made comments about, what this fee is, and I was highlighted in here. I was blessed enough to be in his column here, kind of explaining what that fee is. It's an FHF fee that Fannie Mae and Freddie Mac are both implementing, and it's effective with any lender you use. Okay, so it's not just me, it's basically any lender out there. He also wrote an article that I was also a part of. I've been in several of his articles on MSN and Yahoo. Is should you use a no closing cost mortgage for your refinance? I'll go over that tomorrow briefly with you to show you what my comments were there. And again, that was on MSN and Yahoo Finance that it was captioned in there. So there's some fees coming out that are actually making loans a little more expensive. And so that's what's going on that front. We went over that there. The calendar tomorrow we have an unemployment rate. We had some of this news come in today, so I don't expect anything tomorrow to affect the markets. Like I said, the only thing that I can see that might give us a little bit of hiccup is what the Federal Reserve, the federal government's going to do in regards to the stimulus plan. All right, so now let's get on to mortgage news. I'll post this here probably in the next half hour, 45 minutes. It's just an article that you can follow and just read some captions. But pending home sales just hit an all-time high. Again, in this front, I don't expect a housing crash. Do I expect a pullback in prices? Probably starting at the end of the year, going through the first quarter? Yes. Do I see a crash? No. All right. The next thing I want you guys to follow, and I keep forgetting to do this, is here. I'll put you a link down in below in the description. There's a greed index, and I follow this. This is one thing I follow that a lot of people don't. Most people don't even have a clue what this is. It basically is telling you, is the stock market overpriced or not? Is the valuations in the stock market too high? This is saying right now we're basically at fair levels. So I don't see the stock market really doing too much, again, unless the stimulus package comes out and once we get a vaccine. Once those hit, I'm going to assure you that mortgage rates are going to go up. All right, so we'll leave it at that. We did see mortgage rates go up 1 basis point today. Let me explain this. I'll put this chart on every day as well when I do my videos, and it goes over what the average mortgage rate is in the country. Average mortgage rate. This doesn't include fees. This doesn't include the APR. It doesn't include anything. It's just giving you the rate. So your lender might come back and say, I got you the 2.91. Well, there's more to the equation. What do I always tell you? What are the costs? How much is it costing you to get this? $5,000, $6,000, $10,000 or $1,500? Huge difference there. With this beta here is, or delta, I'm sorry, delta means difference. What's the 1 day difference? It means this rate is 1 basis point higher than where we were yesterday. So if this is 2.91, yesterday would have been 2.90. Okay, so that's what that means. And we're 4 basis points off of where we were 7 days ago. And we are 76 basis points where we were. This is February of 2019. So that's cut off, and I hate that that's cut off. So you can see here, we're about 0.75% lower in rates today than where we were a year ago. All right, so here's the norm or the average rates out there right now. So I'm going to go over mine with you right now. We're going to start right now with a conventional, or what we also call conforming mortgages. All right, and so this sheet, I don't ramble on for 10 minutes. I'm going to go over if you're looking to, in the conventional loans, if you're looking to buy a house or just basically refinance your current balance, or if you're looking to pull out money. Okay, so again, today is October 1st, 2020. So right now, if your credit score is 740 and you're looking to go 80% loan to value. Okay, what is loan to value? Loan to value is your loan amount divided by the value of the property. Okay, our loan amount in all these scenarios is $250,000. So that being said, a loan to value of 80% means we're using a value of $312,500. So if your house is worth $312,500, if you take 80% of that, you come up with a loan amount of $250,000. So that is the benchmark, and that's what LTV means. So let's go through this. A 740 credit score and an 80 LTV, loan to value. Your rate, if you're looking to buy the house or just do just redo your current balance to a 30-year term, and that's what these are, 30-year terms, is 2.875%. And then this column is the APR. So I'll say it in the first one, but I'm not going to just go through here because I'll probably drive you crazy. So the rate is 2.875 with an APR of 2.952. All right, you're going to see a pattern here. As the credit scores go lower, it's higher risk for the lender, so they're going to charge a higher rate. Okay? So with a 700 credit score, everything else being the same, your rate would be 3.125. If you go down to a 660 credit score, your rate is 4.125. A dramatic difference here. So you can see, if you call me and said, Dan, what's your 30-year rate today if I'm looking to buy a house? Well, I need more information. The information I need is how much money you putting down. In this area, you need to put 20% down. What's your credit score? Because if I quote you a 2.875 and I pull your credit at 6.6, and I call you back and say, well, I can't get you 2.875, I'm at 4, you're going to say, Dan, oh, that's a bait and switch. No, I'll blame myself because I didn't ask you more questions. I didn't say, how much money you put down? What's your credit score? You know, what kind of property is it? There's a whole bunch of factors that go into your mortgage rate. Okay, so that's what drives me nuts when somebody does call and say, what's today's 30-year fixed rate? Oh, I need some information from you. In my analogy, I have a lot of people say, no, I just want the 30-year fixed rate. It's like, so here's my comeback is. I call my mechanic and I said, hey, my car's in the garage and it just won't start. What's wrong with it? Well, I don't know. Is there gas in the tank? I'm not going to tell you that. Is there spark plugs in the car? I don't really want to tell you that either. Well, how am I supposed to tell you what's wrong with your car if I get nothing? So, I failed to tell the guy that I removed the engine last night and that's why it won't start. So, sorry to be. That's my story of the day. Okay, so now let's get to cash out. If you're looking to pull out money, again, a $250,000 loan, it's 75% loan to value. At a 740 credit score, your rate is 2.99 with an APR of 3.067. If your score comes back at 700, well, now your rate's 3.375. Well, if I pull your credit score in at 660, it's 4.625. So look at the difference there. It's major. It's a major move. Okay, so now let's go to the FHA rates. And you're going to see a little bit of a pattern here. FHA rates in many cases are better. Here's the con. FHA charges a fee in most cases of 1.75% of the loan amount to insure your loan. However, let's say, for example, your credit score is 660, your rate's 4.125 with an APR of 4.2, but I might come back to you and say, well, why don't we do an FHA loan? Because I can get you 2.75 with an APR of 3.01. Why would we not do that? Okay, again, we're trying to get the money as cheap as we can. That is rate and that is fees. All right, but so let's go through this. A 720 credit score, the rate is still 2.75. 680, still 2.75. You can go all the way down to a 620, that rate now is 3.75. If I showed you what the rate is on the conventional loan at 620, you'd be like, there's no way I would do that. I don't blame you. That's why we would go with an FHA loan. VA loan is the same criteria. Here, let me give you the difference between these. VA, obviously, you have to be a former military. And it will go to 100% financing. FHA will go to 96.5% financing. So you need 3.5% of a down payment. Okay, so that's the differences there. But if you're a veteran, all day long I would have you go into a VA loan. So now let's go to the jumbo rates. These are shocking. And if you're out there, especially in California, Florida, some of the bigger areas in Chicagoland area, and you need a jumbo rate, guys, reach out to me. We have some of the best rates in the country. Okay, so you can get $1 million loan. You can go higher than that with it's a purchase, or if you're looking to refinance your current balance, you can do $1 million loan with a 780 credit score with a rate at 3%, 30-year fixed, APR 3.055. Very, very, very minimal fees. I'll do another video explaining what the rate is and the APR, why there's a variance there. Basically, the variance is fees. So the bigger the difference between these two, the more in fees you're paying. Okay, so that's why I compare your rate, your APR from me versus, that's when I give you the second opinion. I'll go through it and say, here's my rate, here's my APR, here's their rate, here's their APR, here's their fees, here's my payment, and I break it down meticulously. 760 score, you're at 3.25. 3.25 APR, we are waiving our lender fees. 740, 3.375. You have very, very, very minimal fees on that. It might be in the tune of max out at $1,000. 720 score, 3.375. Again, guys, this is 30-year fixed rates. Most of the time when people do a jumbo, they're getting an ARM or some goofy loan. This is 30-year fixed rates. Okay. So now you see this and you say, Dan, what do I do next? What's the next step? It's pretty simple. The best way is you got to reach out to us. And there's a few different ways, or a couple of the best ways to get us is right here. Go to therateupdate.com. Okay? Scroll down here. We have a 1-800 number. The phones ring off the hook all day, every day. And I advise you to call in. You might get me. You might not. I'm just being honest. If you don't, I'm not ghosting you. I'm not trying to avoid your calls. We're extremely busy. I review every file for which program we're picking to go into to make sure it's correct. What rate you're getting to make sure it is the lowest out there that we can possibly do and still make money. What the fees are. I go through everything just to make sure we try to get you through as quick as we can. Right now, unfortunately, it's taken about 60 to 90 days in many, many cases. I'm not trying to deter you on calling us because of that. But if I can save you $5,000 and it takes me an extra 30 days, is that not worth it? Okay, I'm just being honest. We contemplated raising rates to kind of slow down the business, and I was like, no, let's work harder and longer to try to help as many people as we can. Love for you to follow us on any of the social media that you can find right here. My name is Dan Frio, DANFRIO. You can reach me by emailing me, and I respond to every email. If I miss you, I apologize. If you email me on a Saturday night or Sunday night, I apologize. I might miss you. I probably get 300 to 400 emails a day. I'm not trying to avoid you. Please just shoot me another email saying, hey, Dan, did you miss this? I promise you I'll get back with you. Like I said, what I try to do is I ask you, if you want, please get a second opinion. Send me that loan estimate. Send me that fee sheet from what you have. Or you haven't started shopping around yet, send me a copy of your mortgage statement. Let me look through it. I'll probably call you or email you back with a few questions, answer those questions. I'll get right back with you saying, here's what I can do. As long as the information that you give me is backed up, you can etch it in stone. I promise you, I won't bait and switch you. All right? But email me at dfrio@preferredrate.com. If you want to get the ball rolling, all you have to do is hit here, the Apply Now button, get a free estimate, go right here, and that is it. What I'd like to ask you to do, I'm going to ask you a favor, and I'm going to do this for the next, between today and tomorrow. Everybody that subscribes, I'm going to send you out a Pigs Get Fat, Hogs Get Slaughtered shirt. Anybody that closes in the month of October is going to get a Pigs Get Fat, Hogs Get Slaughtered t-shirt. So I'd like for you to reach out to us. If you would, I'm about 50 people shy of 10,000 subscribers. So please give me a thumbs up, subscribe down below, hit the bell, so anytime I do post a video, you get an alert. If it's something you want to watch it. If it's something doesn't interest you, don't watch it. That's all I got to ask. So that's it for today. God bless. Take care. I'll see you tomorrow, same time, same place. Bye-bye.